I'm discombobulated. All of a sudden now I realize I don't have my glasses and stuff. But hey, good morning. Let me remind you that trading is risky, not appropriate for everyone. Past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. My name is Wayne McDonell. I am the Chief FX Market Strategist for TradersWay.com. Thank you very much for being a client. Throw your diamonds in the sky. We are investing into you up front. I'm here to help you learn how to trade and build confidence in your skills. And no rah-rah speeches to get you over trading and stuff like that. But really, I want you to learn how to be a completely independent currency trader that can make decisions based on technical and fundamental analysis. I think that's smart, right? So one day when you do have the skills and confidence and you are ready to trade real money, you'll choose TradersWay.com as your prime broker for your successful Forex trading business. You might make that decision based on fast execution speed. You might make that decision based on competitive spreads or fees. You might make that decision based on world-class customer service. Ultimately, you'll choose Traders Way out of loyalty and respect based on our time working together every day. I do these sessions Monday through Friday, 7:30 in the morning. That's a couple of hours before the U.S. stock market opens. That's approximately London lunch. This is a great time for us to get together as a community. Forex.Today. And how is your trading going? How are you doing? How do you feel emotionally? Good. Barry says good. Right on. Anyone else want to share? Barry's a whole community. Good. All right. Henley, also good. Right on. All right. Could be going better. All right. Okay. Mm-hmm. Always improve. Sure. And what do you think about the what do you think about the 10-year T note hitting 3%? Has it influenced the markets a bit? Gene finished summer school, huh? That's cool. And the book, right on. Yeah, it hung above 3%. It's still, I think it's 3.01, which I think is very interesting, which tells us that people haven't really been buying it. But the stock market did come down yesterday, didn't it? Significant decline in the stock market, but yields didn't decline. So it looks like maybe profit taking, going to cash. So we'll have to take a look at the charts and try to derive what's happening out there in the world of global finance. Let's come back to these. Let's start with the yens. Okay, that's the one that didn't work yesterday. All right. So how did this go? I bought it at 132, right? Moved my stop to 134.5 or something. And cool. Done. Good trade. Congratulations. Perfect. This is what we do, swing traders, right, Hanley? You're like, I'm a swing trader. What do? I swing trade. It's not a lot of pips, but whatever. It's just what we do. So anyways, well played, well played. So we're done. That's how you swing trade. Cool. The interesting thing is Henley had that set up on Friday. Nice job, Henley. So that's it. I mean, where else is it supposed to go? We're back. There's the monthly and all that kind of stuff. Done. It's just done. Monthly, weekly, done. Now USD yen, I haven't traded, but this is where we're out nomad's land. Looks really nice. Looks like dollar is much stronger than yen. Good thing I was ultra short Japanese yen on Friday and Sunday. So I didn't trade that, so I just don't have it. And then here's this one. I was on this, and we had talked about, you know, no shadow of a doubt that there would be bears in here. What we didn't know is how many bears, you know, whether it takes over or whatnot. So I bought it down in here and we rallied it up, but we were very clear that this is where bulls would be challenged, right? Remember? Even though that it popped up and broke out, this would be a foolish area to buy. You can see I even have the fibs pointing down. Right? Right? Is there anything to learn there? Well, this whole discussion was, if I'm a bull, I'm buying down here. And I did buy, right? You saw the trade yesterday. Then I reversed the whole psychology and said, well, if I was a bear, there is absolutely no doubt we would sell here at 83. No doubt whatsoever. And therefore, there's going to be bears there. And that I think we had it set up here as, you know, you either sell this or you sell this if you're a bear. And a bull goes back to Sunday and Sunday and Friday. The only bullish move is buy it here, which I did. And now I'm busted out at break even. Boo-hoo! Okay? But do you see how, you know, sort of the reverse psychology? You're bullish, but you should think like a bear. Also, psychologically, I've taught myself to be quite content with break-even trades because I've had the opportunities to make money. And, you know, without risk. And the more I can do that, the better off I'm probably going to be, right? So my opportunity cost was, you know, I was up 50 pips. Could have taken my profit. Could have. Did you change your mic? What's changed? Sounds as good. Is everything okay, guys? Can you hear me all right? Yeah. All right. Cool. I'm in a weird mood. I was in a weird mood yesterday, but I don't know. All right, so anyways, that's Aussie. I wasn't confident in it, but I thought, look, if all the ends move, it'll go with it. If it collapses, I don't need the 50 pips. So this one's still working. Bought it at the bottom of the channel, 50% retracement, psychological level of 51. I'm at 52 and a quarter, so that's up about 125 pips. Brooke, just the old Forex.Today webinar link takes me to an empty room. Is that right? Yeah, that's super weird. Anybody else run into a situation like that? All right, so you're on the Forex.Today website now, right? Yeah, okay, good. Yeah, all right, good. Well, here you go, bro. Sorry, bro. Ma'am. So anyways, that one's still alive, up 125 pips. The other one, I'm out, but I cashed out with 125 pips. Here's the CAD. CAD went up, hit our line in the sand, and then is now got some troublesome trucks. What would bring CAD down so much? And then also, I'm pretty sure, can you see all these red lines and resistance lines and stuff? I'm pretty sure we knew 85 was going to be a challenge because we've never really made the higher high, but we're still sort of in this uptrend, right? No, Brooke, what makes the yield in the 10-year T-note fall? If it went from 3% to 2.75 is what I was talking about yesterday, what would make that happen? Brandon says, should we have walked away with some of the profit? That is your job. You just defined your job, Brandon. Getting into profitable trades should be easy. If you don't know how to do that, you're just not a profitable trader, right? So let's say one day you get that taken care of. You just know where to buy and where to sell. It's so much easier when you know how to buy and when to sell, right? Then you spend your whole day and all your restless nights worrying about, should you take your profit, should you not take your profit? Should you take your profit, should you not take your profit? Should you take your profit, should you not take your profit? I should have taken my profit. I should have taken profit. I should take profit. I need to take profit. That's it. That's now your days and your nights. So the real answer is, yeah, maybe you should have, maybe you could have. I could have taken the 50 pips on the Aussie, could have taken, even more on this one. Yeah, maybe. There's no right answer to that. What determines your answer is usually your initial strategy. And then the second thing is, perhaps the changing market conditions or the velocity of the changing market conditions and such. But you have just defined what a foreign exchange trader should be doing, right? Again, what kind of market would this be if everyone in the market was just simply trying to be profitable, right? It's most, well, let's say professionals. All professionals are profitable, right? So they're not worried about getting into a decent trade. They're worried about, when do you move your stop? When do you take your profit? Do you let this run? Will it go to the next pivot? Will it go to the next high? What about this and what about that? So yeah, could have walked away up there. Yeah, but see, when I draw these things, guys, When I say, look, this is going to be an area where we're challenged. Oh, look, this is a big psych level. Maybe I should write that down. Right, so I put it there with the red line. This is the thing that I'm trying to show you. This is where you're going to get challenged because we know there are bears. But you could also interpret that as, well, if you're not a bull, if you are a bear, wouldn't this be a place you'd look to have a bearish selling trade plan? Now, how about a lower low, lower high? Would you sell this? Well, that's what I marked all this up yesterday. Yes, if you're a bear, you should sell at 85. And if you're a bull and you bought it at 84.50 and you're worried about your 50 pips profit, yeah, take your profit, right? By all means. Okay, but that's not something I'm not going to tell you the right answer because I don't know the right answer either, right? But and this is where you and I could, let's say, even disagree. But yeah, there it is. So, but Brooke asked, should we start to sell? Well, Brooke, what makes the 10-year T-note drop from 3% to 2.75? Well, yeah, bond prices, but what changes bond prices, right? No, Pip Pirates got it all wrong. Yeah, but what makes higher prices? It's not like someone comes out, rings a bell, prices are higher now. Somebody's buying bonds, driving up the price, driving down the yield. So somebody would have to be buying bonds, Brooke. And then the question, why are they buying bonds, right? Well, whatever. And then on the second part of that, Brooke, is if it's foreigners buying bonds, then yes, then you're going to see those moves. So this goes back to Brooke's comment. Well, should we be dumping this or dumping that, whatever it was? Well, if the 10-year T-note hasn't moved, then why would these markets dramatically change direction if foreigners are not, right? So if you're talking about, like, let's say USD, USD something, whatever, the dollar is going to increase in value if foreigners are exchanging their foreign currency for US dollars. Demand for dollar goes up so that they can buy the 10-year T-note because they want to lock in a 3% yield for the next 3 years. Now, is it a European bank that is getting paid 0.62% on a 10-year from Germany? And they're like, why are we only earning 0.5%, right? Or 2/3% in Germany when we could have 3% in the United States? All of a sudden, they might exchange their euros for dollars and then dollars for 10, basically they're swapping from bunds to notes, right? So that's why you got to watch these things. I didn't see a crash in yield, so I didn't see a spike in demand by foreigners for the 10-year T-note. But if we do, okay, if we do, then yeah, then maybe those markets move. Okay. So anyways, I'm still profitable on there. I can't lose me. So what's the big deal? And then this one I never got in. Remember, I tried. I missed the dip, and then I had a buy order down here at just above 50, and like a whole day went by and I didn't get it. So then during yesterday's webinar, I canceled the order, and it looks like I'm lucky I did. So right now it looks like I got 125 pip profit, a break even. I have another one floating with 125 pip profit, and the other one still has like 25 pips or something. So yeah, so I have 130 pips floating, 125 pips in the bank, and break even on another. Neat, right? Neat, right? That's right. Isn't that how Forex should be? It's really, really simple, really boring stuff. I don't even think I'm in good trades. Okay, let's move over. Is that where you're working towards? Is that where you just really boring trading? And you notice it's exactly the same trading that I show you every single day, day after day after day. Sometimes I pop trades in just to show you. I'm like, well, look, we talk about it all the time. Here it is. Boom, boom, da, 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 da. Right? Aussie dollar. Local way. Very dramatic move. What do you think? Are you taking it down to the X, Barry? This X? Not that one. That goes back weeks. So this is a real bummer for me because I was a bull. Remember, we're buying here and buying here and buying this dip and buying that dip, and then that's that. So this is supposed to be the weekly bottom. And I wouldn't be shocked if I was long this around this price in a week or two. But, well, the thing is, Barry, we're not supposed to get there this week. Okay, so you're supposed to be taking profit at 75.50-ish. So, like, I even would ask myself, do I need the extra 4 pips, or can't I just take my profit now? But we're supposed to be done if you're doing weekly analysis. But boy, look at this. You see how perfectly this hit a monthly pivot and then stopped? And then over here, it retraced back to the monthly pivot. Look how wonderful it held at this monthly pivot. Just beautiful stuff, right? So you have to decide if you don't want to take your profit at weekly S2, then you should probably just delete your weeklies. And just have monthly trades. Do you think this monthly M3, do you think that was important to this trade? How many people look at this chart and say to themselves, how many people look at this and believe it's tradable? Okay. So I used to define, many years ago, swing trading as trading the 2155 cross, and more like scalping was trading the 5/8. That's kind of how I looked at it. So imagine you said to yourself on this 15-minute chart, which, you know, is slow, right? That you, any sort of kickoff of this monthly pivot, you can do things like sell the 2155, right? Take profit, sell it again, take profit, right? Sell it again. But it's amazing how well it uses these pivots, right? So if you're a bear, and the thing is, I wasn't a bear. Okay. No, that seems so slow, Barry, that by the time you've had it, you see that most of it's done. So like I use predictive pivot points. They're leading indicators, Barry. So you'll notice how when we do things days in advance, sometimes weeks in advance, even months in advance. We start looking for very particular setups. So if I'm waiting for a golden cross, by the time it happened, you threw away at least 50% of the move. And almost by definition, you know, you're reactionary, right? You're like, oh my God, look at the golden cross. You're like, golden cross, where have you been the last 3 weeks? Like, now you're bearish, right? So that's just my thought process. I never found those types of things to truly be helpful. Or at least truly profitable, right? But anyways. So like this is the great example. If you're a bear, like anyone that's taken the swing trading course knows that, you know, this isn't a selling price, that's not a selling price, that's not a selling price, this pivot's not that important, right? This not a selling price, that's not a selling price, that's not a selling price, that's not a selling price. On the very first day of the month, you would have said, as a bear, that you want to sell at basically 78.0000, right? Oops. I mean, I find that amazing. And on that day, on that first day, if you're a bear and you said, boy, I want to sell at 78, your target was 75.25, right? Or whatever, this line. You knew that on the first day of the month. In fact, you might have been talking about it before the first day of the month, right? Could have been the last week of last month. You might have been eyeballing these moves. And that all of that is predictive, right? They're not reactionary. So way down in here, you're like, boy, I'd really like to sell this at 78. And if I sell it at 78, I'm going for 75. There's a 300 pip potential move there I would like to set up as a bear and take. That is trading, guys. That is it. If you just learn how to swing trade, that might be what you do by definition. Maybe you don't learn how to scalp. Maybe you don't learn how to, you know, trade the news. Who cares about trading the news, right? All that kind of stuff. Now, on the first day of the month, I had a similar but different plan. I wanted to buy it here and take it north. And I said, well, I want to buy it at 76.50 and I want to go up here. I want to take it to 79.50. Oh, 300 pip potential up move. And the market behaved beautifully, right? And then Stone says, I see the M3 short, great, but the later short after M2 holds. Oh, yeah. But that's what we talked about that day, Stone. That it dropped like a ton of bricks. And on Monday, I'm like, I don't really see an entry on this. Yeah, it fell like a ton of bricks. Yes, it's probably going to continue falling. I don't see how you can conservatively get it now. I'm like, where were you on Thursday? But that's the point. Amateurs are selling this garbage down here. This stuff. That's all garbage. This is just garbage. I think I said standing in front of a steamroller to pick up pennies. I think as I described that. Okay? Like, where were you back here? That's a good trade. Now, I didn't take it because I wasn't a bear, but isn't that what a professional does? A professional says, I'm bullish on this pair. Therefore, I'm going to buy at support. Yeah, look, I'm sorry. It only went up 150 pips before falling apart. I'm sorry. Right? I'm sorry. It was only up 150 pips. I'm sorry. I guess not good enough. So anyways, the bears finally come along, and they sell it at 78. Like, good trade. Awesome. Woohoo. Good job, bears. That's exactly what you are supposed to do. And if I was a bear, I would have done that. But that's the whole thing. A bull should be doing bullish stuff. A bear should be doing bearish stuff. And amateurs don't know what the hell they're doing. Right? They're picking up this crap, and they're like, look at me. I made 15 pips today. Oh, my gosh. Oh. Right? Oh, I made 17. It was great. It's just funny, like, oh, but you didn't like, right? So I hope you're realizing these things, right? I hope you're really looking at and starting to smile to say, wow, I know what amateurs are doing because I used to be an amateur too, right? Like, who is buying this now? What kind of person would be buying it now? Boy, if I was on that, I would want to take my profit, right? Or don't don't use weeklies, right? Maybe it's all a monthly move only. Okay. But what's the smart message here? That you knew you should stop selling in here. That's what the message was for about 3 days, I think, 4 days. Because an amateur is going to keep selling this, right? We talked about it. Amateurs are going to keep selling. It's beautifully bearish. It's incredibly bearish. It's unbelievably bearish. But only a fool would sell here. That was the message that whole time. That it should just be done. It's probably done. I think I had talked about, like, if you've been trading for 10 or 15 years, you would know that it's probably done. That if you sell here, it's probably not going to work out. Does that mean you have to buy? No, but you should definitely stop selling. And look at it now. It was laughable at the time. You were probably scratching your head going, I think Wayne's lost it. Look at it now. Okay. Now what? Yeah, well, that's the issue. Now what? If you're a bull, maybe you buy a dip. Maybe you set up next week. Maybe you set up next month. Let's look at it now just pure weekly. John, are you really upset? Oh, well, I apologize. I'm trying to get an emotional response. I'm not insulting you. Or at least that's not my intention. Okay. And also, people have been here for years, so you know a lot of the message goes to them in particular. But the point is that you need to break the old trading habits. Okay. And the old trading habits that, right? The old trading habits are that amateurs are generally reactionary, right? And meaning you open up a chart, you look for a trade, but there's no strong, right? No. Well, no, but no. Hey, don't. John 1, okay, John 1, right? John 1 is absolutely fine for saying that. I appreciate the feedback. And I'm certainly not trying to insult anybody, but I am trying to get an emotional reaction. So if John's fired up, hopefully he's cool with that and gives me an opportunity to, earn his respect. But what we're trying to do is show where most of the common mistakes are made, right? And that we're trying to get everyone here to stop trading in those areas. That to move from an amateur to a professional, your trades should have, right? Yeah. So how do you say it in this way? Somebody is buying it in this area, and you should know that that red zone is not a buying area. It's a taking profit area, right? And so somebody is buying that, but it's just an unbelievable, huge mistake, right? And so what we should do is combine things. First of all, fundamentals help most of these, right? Yeah, no, John, I'm trying to. Also, John, it helps if you ask questions because then I can target it to, specifically to you and to your needs. Okay? So again, I apologize if I've insulted you. I apologize. It's my mistake. Right? But again, if you're newer, a lot of these, what you should know, John, okay? So hang on. What you should know is generally we plan our trades a day ahead, a week ahead, a month ahead, even 3 months, even 6 months in advance. Okay? So when I'm saying, hey, an amateur makes a particular mistake, I'm not treating you like amateurs, right? So because we have gone over lessons, like literally for years, I literally have been doing this for teaching people for 15 years, right? It's like literally. So I prefer to treat you that you're not necessarily an amateur, right? Right? Because you may not be. Even though you're here, you may not be. You used to be. And so an amateur would used to open up a chart, look for a trade. Hey, I think it's going up today, and make a trade. Where I'm reinforcing trades we planned last week, and then I took those trades, and now we're up, many hundreds of pips. And it's just simply, doing things like identifying ahead of time whether I'm a bull or a bear. Now, how do I do that? Well, long-term technical analysis is very easy. right? Thank you, John. The second and a little more difficult is fundamental analysis, okay? Once you've made that decision on bias, then you move on to the next step, using technical analysis to identify prices. You can use moving averages, you can use, right, which are lagging, you could use pivot points, which are leading, but it's the use of technical analysis to simply trade in the direction of your bias. Now, amateurs just generally don't do this, right? And so I'm pointing out things like, look, if you are a bull, you need to take profit here. If you're using weekly pivot points, it's just factual. And if you don't want to take profit here, then you're just simply not using weekly pivot points. So delete them. And you're trading on a higher time frame, like monthly pivots, right? But you wouldn't be buying it here. But what if you were a bear? If you were a bear on USD CAD, then you may be looking for opportunities. Yeah. Well, John, why don't you slow your trading down, John? Slow it down, right? Just slow that down. Yeah, let's fix that. So, for example, were you swing trading? Were you scalping? Were you spot trading? What was your general strategy? Multiple time frame alignment. All right. Well, I do that even if I'm scalping. Short-term trades. All right. So you look at what? Yeah. Well, I call that spot trading, John. Okay. I call that spot trading. You're basically selling the London Open, or you're or buying the New York Open, basically, right? One or the other. There's a John and a John one. Yeah, and a Juan and a Juan one. Yeah, yeah. So yeah, so I call that spot trading. Which means you can get very unlucky, and you probably have found that out, right? You can get unlucky. Your direction might be right, but over that course of a couple hours, maybe it doesn't, right? Yeah. Well, yeah. So in that case, John, what you're looking at is, the New York Open. I mean, that's what that whole overlap is. Because now you're getting caught up in volatility. So your volatility. Your short-term volatility is probably making or breaking your trades, and apparently, recently breaking them. So why don't, if I was mentoring you, for example, I would, first of all, I would stop, I'd stop the strategy that you're using, right? Let's stop that. Because I actually find that kind of difficult. I find that a more difficult trading strategy because of the volatility issue. You might be correct on being a bear, but over the next 90 minutes it might be bullish, and you just get messed up. So I would probably move you away from that, and I would probably move you more toward a swing trading scenario where you cut your lot size smaller, your stop is further away, and you're in a trade not for a couple of hours, but usually 2 to 4 days, not 2 to 4 hours. And therefore, generally speaking, you volatility isn't your issue anymore. So, John, what's your typical stop? How far away is your typical stop? Oh, oh my God, John. John. All right, can we, whoa, dude, we need to fix that. Oh, yeah, holy smokes. Yeah, no, I know. And I honestly feel that way too. You just like ruined my day, John. I'm like, oh my God, John. Holy smokes. So are you, yeah, yeah. Are you teaching yourself how to trade, or did somebody else teach you this setup? Well, elaborating maybe here in front of the group is probably not the right venue, but just let me know if you're self-taught or some guru taught you this. I need to know what I'm working with here. We're like, we need to fix this, John. Yeah. 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 Okay. Well, let's just stop your strategy. Let's just stop it. First of all, okay, that's my opinion. I'd like. I mean, let's fix this, right? Um, yeah. Yeah. Well, you don't like stops, but yeah. So, like I said, if I were me, if I were you, if you were me, you would recommend to you. I would move toward the swing trading strategy. Let's get rid of this volatility issue, because you're getting messed up, and maybe this is where you're not using your stops because you're like, well, because sometimes they work for me, sometimes I get stopped out, and then the thing moves. All of this seems to be a volatility issue, where you see that your general strategy is usually correct. I'm reading into this now, right? That if you're a bear, you're generally correct. But then sometimes you get knocked out, so it rallies for an hour and a half, hits your stop, and then falls. And you're like, well, son of a gun. So then you move your stop even more on the next trade, and then it goes up there, hits you, you lose even more money, and then it drops like a ton of bricks. And this is where people start saying, oh, it's my broker hunting my stop, or oh, I'm getting whipsawed. I haven't even heard that in so long. We can fix that. We can certainly fix that. A swing trade doesn't have that type of volatility, because your stop is in place, but it's probably further away. So let's say you typically use a 50 pip stop. Well, let's cut your lot size in half and have a 100 pip stop, or something to that effect, right? And also, if you plan on being in a trade for the next 2 or 3 days, what happens in the next 90 minutes is generally irrelevant unless you're just simply entering the trade, right? Yeah, well, I don't care your lot size, John. If you're losing money, I mean, anybody can lose money, right? But we can fix this, John. Well, yeah, right? Well, see, all of that is irrelevant. I mean, I could say, look, when I traded at GFT running a fund, I had my own dealing desk with a full-time employee just to clear my trades. Great. So what? Right? Yeah, well, first of all, you need to stop. Second of all, you need to learn how to swing trade. So I cover swing trades a lot. There is a swing trading course. You can take the course. But whatever, you need to stop what you're doing because, okay, your short-term volatility is what is causing your problem, right? Right? That's what it is. That's what it seems to be to me. That you're probably okay in direction, but the volatility an unluckiness of, especially market opens, that volatility in the course of, let's say, 90 minutes, you lose money. So let's get rid of that. Let's have it so that you're in trades longer, your stops are farther away, and what happens over a 90-minute or a 4-hour period should be irrelevant. And if you're a bear and you're selling in a bearish market, you should probably be okay. Now, then you start adding things like pivot points to your analysis. And like, if I was a bull, John, I would look at this and say, I'm a bull, but I need to take profit. I'm a bull, but buying here is not the right thing to be doing. Okay? Right? Imagine, John, how good of a trader you would be if you were trading 3 years from now. Right? That's what we should be focused on, John. Let's get you 3 years of better trading experience. And I think you'll be really, really good. Okay? So again, my job isn't to come in here and insult amateurs, but you should get fired up if you're trading like an amateur, because I'm trying to teach you better ways. Now, like oil, for example, right? Here's a great one. Our trade plan was to buy it around the $62.50 area and take our profit close to 70. The real area was 69 basically, and the high end of it was 70.30. So between 69 and 70, that was our target, John. Going back to even the end of last month or the month before, like we're talking about middle of March, we're planning these things out, right? These are daily candles, John. So let's put it to 4 hours. Okay, let's put it to 4 hours. This is oil. Okay, you're getting killed on each of these individual candles. Each one of these for you is basically a new trade, right? Sure, I'll upload this, right? And yet you see the bigger trade. The bigger trade, when market conditions are favorable, right, is almost like so much easier, right? That's the general trade that we're trying to get. I'd like to get you to there, right? I'm trying to get you to buy here on the retracement, right? Come down to support, and you see this giant X? That's our target. So you should take your profit and be done. And that's where I'll say, like, well, you know, amateurs are trading it now if they're still buying, because the month is done. That is the month of April, right? That was the predictive move for the month of April. So this is oil, but we do this on currencies as well, right? I want you to get focused more on these bigger moves and not get whipsawed out during 4-hour volatility. So London doesn't open properly for you. And you lose money? And apparently thousands of dollars because London didn't open your way? Well, there might have been news in London. Carney said something. The Queen farted and you lost $5,000, right? No, I'm not talking about oil. Don't worry. It's just technical analysis. All that matters, if you're worried about like, oh, that's oil, well, then you have to learn the fundamentals, right? I'm just showing you a chart. That is a simple swing trade, right? That's all that matters. We can pick any one of these other, you know, we can pick a yen pair. I just grabbed a chart, right? Yeah, peso's not ready yet. Okay. Right? So, you know, so anyways, just you're going to have to take my word for that. The rest is up to you. I mean, I'm here every day, John, and I am rooting for you, right? And maybe after doing this for 15 years, I can share a few things that I think will help. Okay? Yeah, excellent. That means you should ask questions. And a few other people said, hey, right, you're new and all that kind of stuff. Then cool, right? Then ask questions as well. I find the same like 10 people ask questions. So I assume you know everything because no one else is asking questions. The people that are asking questions, I know they know, and we've covered it in detail, right? So cool. I'm here, man. You're the boss. Okay? So anyways, going into this is another situation. Here's a swing trade. We knew on the first day of the month we were bulls. We wanted to buy here, right? Our target's here. We're done. Yes, I'm on this trade. Yes, it's a weekly trade. But the main move, the low-hanging fruit, was this swing trade. Okay? You can see it drawn here, right? There's the entry. Here's the predicted target. And you should be done swing trading, monthly swing trading, right? For April. April's done. It's over. Isn't that interesting? Right? And then, but who's getting involved in it now? Do you see how all of a sudden the price action gets uglier? And it's up and down, up and down, down, up and down, 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 up and down, down, up and down, down. Well, this whole gray zone, what does it mean? Yeah, right? Hey, Dunner, thank TradersWay. When I back out this way, this says the trade, the good trading, right? The good trading, the big money is done. The big money, the good trading is done. All of this is now crumbs. Now you can be a bear. You see this? Because we know that this gray area is where bulls are supposed to get out of the trade. Bulls are supposed to get out of the trade. Bulls are supposed to get out of the trade. Well, what does that leave for bears? Shorter term opportunities, right? And that's kind of what's happening. But what I'm interested in is next week I'll be setting up next month's trades. Next week I'll be setting up next month's trades. And that's going to be interesting, and we'll look for the new big move. Okay? So bears are scalping this, but then that's shorter time frames, right? So if you're a bear now, and you see that there's lots of opportunities, where are the trades? Well, on Monday, I would have thought the bearish trade was here. That's why I've already marked it. Okay? That's why it's already marked. I took the M3 and the 85 psych level, combined them together and said, this is where a bear would sell. Okay? I'm a bull, though. I'm rooting for global macroeconomics. And I talked about buying this in a downtrend and how risky it is. So my stops were fairly close, if you remember. And by day 2 or whatever it was, I'd already moved my stop to break even. Because I'm not confident in it. Because I know there are so many bears here. Okay? This move here may have taken John out. John might have shorted at 84.90. It spiked up to 85, 20, taking them out, and then it dropped. And that's where we're trying to, that's the part I want to fix. Okay? That's the part I want to fix. Very wordy. Is that good, John, or is that bad? Yeah. So that's where we need to fix it. Okay? And that is fixable. Cool. Cool. Very fixable. Will you let me, over the course of a year, fix it? Are you willing to give it a year? Just trying to get my Harvard shirt on nicely. Yeah, cool. No. The other John says, is this a double bottom? No. Do you know why? I don't even know how to explain it. Because it's not in a trend, right? I think if you saw it like this, I would call that a double bottom. But, this is not a higher... We're in something like that, John. I don't know how you call it. It's not... I mean, here's the support, not here. And the resistance is higher up here. So we're just sort of caught in the range. And this is what happens, by the way, when you're setting up trades that I've already explained as, how do we say it? The good trades are gone. Right? It's like today, somebody asked about the Aussie dollar. I think the same person asked about the Aussie dollar yesterday, and I think it was Aussie dollar, and I'm like, well, it's dead, it's over, it's done. It was done yesterday, it's still done today. That kind of stuff. Yeah, beautiful. Oh man, too bad I was a bull, huh? See, I'm hoping for better global macroeconomics. And remember, I wanted the markets to be bullish until June. You guys remember that? Like the second, third week of April, basically second week of April, after NFP, I wanted to see rallies, and it would the rally would last from the second week of April to about June, maybe even June 15th. How many people remember that, like very specifically? As soon as we get into April, yen strength is going to go away, yen pairs are going to rally, and maybe it goes to the middle of June, and then the whole thing will probably collapse, right? I mean, very, 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 very specific. And like moves in Aussie dollar are kind of related because it's macroeconomics, right? Yeah, nearly the day. But that's kind of the stuff I'm trying to get you guys towards. Right now, this one started in early March, in fact, but nonetheless, right? I'm trying to get you to these more macro moves, and because of that, you face less volatility. You're not, right? When your stop is, let's say, 400 pips away. I'm not saying it should be, but let's say it was. You're not likely to be stopped out in the next 10 minutes, right, or 20 minutes, right? So, anyways. Yeah, Wes, you got to remember that book is like 10 years old now, Wes. So, right. So, you know, I don't know. Amazon, when I wrote that book, Amazon was a bookstore. Anyway, so I don't know where that website was. Yeah, no, I know. Okay, so focus on that. The shorter time stuff, the shorter term stuff will include the volatility, and then in those situations, you'll also find that you'll never make the bigger money anyways. So selling like the New York Open and stuff, yeah, that's cool when you're just sort of passing time. Pick up 25 pips here, 25 pips there. But you still need the higher time frames. So what time is it? I've babbled on a bit. Well, okay. So once again, looking at this, my plan for the week, guys, as explained on, well, to some people I explained it on Friday. To other people I explained it on Monday. Was to buy this and rally it up to here. So I did. And I knew the one place where I was going to be challenged was here. That's why it's all marked. And that's really, right? This is where you need, right? This, where you know where you're going to buy, you know where the others are going to sell. It helps you manage your risk. You saw me, I told you, I'm like, okay, we're up here. This is where the risk increases. So I'm going to move my stop to break even to remove the risk. And now if it breaks, I'm going to get paid, and it's going to go to 84, and that'll be that. In this case, it didn't break. The euro did break. I made my money on the euro. I'm still up 125 pips on the pound, right? Oops. Look, now I'm up 145, right? So I'm still, what is it, Wednesday? I'm up 300 pips for the week. Then lost money on the macro, buddy. Really? We should probably figure that out someday too. Cool. So John, you're going to work with me over the next year to fix that. Cool. We'll fix these things. Where people end up not fixing things is that they're hell bent on getting rich quick, which is the surest way of getting poor quick that I've ever seen. Right? Right? I mean, that's it. As soon as you let that go, it's amazing how quickly things change, right? So I think in my book I recommend trading for 2 or 3 years on a demo account, and taking a second job and saving that money, so that when you do start trading real money again, you'll be very, very skilled, very, very confident, and you'll be bankrolled. I helped one guy several years ago now out in Arizona, and I'm like, he was becoming a pretty good trader, but his lot size was too big relative to his account size. So I said, well, you got to cut your lot size. And he's like, but I need the money. I mean, my account's too small, right? I'm like, well, then you need to put more money in your account. If you're going to trade that lot size, you're going to need to put more money in your account. But see, he needed the lot size at a certain size so that he can make enough money to pay himself, right? Well, I'm like, well, this is a chicken egg thing. You can't trade that and be conservative and disciplined because you don't have enough money in your account. It's too much risk. You're going to blow the whole thing up, and you'll be working at 7-Eleven forever, right? So he's like, well, what do I do? I said, well, it's easy. First of all, how many cars do you have? 3. Sell 2 of them. What else? Go through your house, go through your garage, go through everything. And anything you don't need, sell it for the money. Raise the cash. So he comes back a couple weeks later and he's like, my wife and I got together. We decided you were right. So we had a yard sale. We sold one of the cars that we weren't using. We cleaned out our house. We cleaned out the garage. And I sold my dog. Yeah, Barry's got it, right? Yeah, and I sold my dog. I'm like, wow. Yeah. Sold his dog. Stupid dog's not doing anything, just sitting on the couch all day. But he did it so that, that he wasn't over leveraged. But do you think this guy was committed? Yeah. Cool. So, your lot size, I don't know. Your lot size, I'm guessing, is probably too high. But, I don't know how rich you are. I've known people. Look, I know people that have lost what was it? Like $27 million in a week trading Forex, right? Right? And it's nothing. He's like, yeah, well, it's only 27 million. I'm like, yeah, well, to each his own. No, but to him, it was no big deal. It's like, so it doesn't really matter, right? Someone else loses $2,700 and it might be they're out robbing liquor stores for their next trading account, right? Shut up and get in the trunk. Yeah. So anyways. But, yeah. Look at everything on a long term. Look at it as a business, John. I'm a businessman, so that's how I've always done it. Think about all the people that drop a couple of million into opening a restaurant and go out of business in 6 months. And I look at those situations and I'm like, they opened a very, very risky business and they were over leveraged. Ed, I think he divorced his wife, maybe sold her or something, and I don't know. I think he was destined to be poor. I'm not sure. I think he had like 17 children. I'm not joking. I think he had 17 children. I'm like, wow, that's a good get-rich-quick scheme. You have 17 children. So I haven't talked to him in years. But anyways, guys, like, think about these restaurants that throw all this money into a new restaurant, updating the kitchen, doing the decor, printing menus, hiring, staff and training them, and they don't have enough money to get through the first 6 months. They're over leveraged, right? They have a $1 million kitchen and they go out of business in 6 months. So what I'm trying to say is have a longer term view and give yourself a year or 2 or 3, as a business should, knowing that in the first few months things are going to be tough, right? You don't want to throw all your money at your first 6 months, because in your first 6 months, John, you're going to suck compared to you 3 years from now if you're still trading. You understand how awesome you're going to be in 3 years? And you'll look back and say, when I started, I sucked. At least that's how that's how I describe myself, right? So you should do whatever you can, right? 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 Imagine yourself in 3 years. Well, yeah, but I'm saying you should have the attitude that you shouldn't, you forcing yourself in a corner like this is part of your problem. Well, first of all, stop trading the way you're trading. The second thing is listen to what I'm telling you. Right? You need to move toward a swing trading strategy that removes the volatility. Okay, well, ask me tomorrow. Maybe take the course at FX Bootcamp. I don't want to make it a sales pitch, but there's a swing trading, right? And when you're done, maybe you join the swing trading group. I don't know. It's whatever. Maybe you don't learn that way. I don't know. But you should identify that what you're doing is not working. And the second thing is it's the volatility, not your, if you're bearish and selling and still losing money, then you need to stop what you're doing and adjust that, right? Instead of banging your head against the brick wall every day. So anyways, why don't we talk again tomorrow? Yeah, good. Boom. Yeah. So now you know what the issue is, right? At least it's one way, right? So anyways, and then Mickey, are you going to be around? I need to get you taken care of for the fund. Cool. I'll see you over there. Yeah. Cool. So I'm gonna move this over to YouTube. Again, if I insulted anyone, I apologize. It's not my meaning, but when I do things like that, it's part of NLP, neuro-linguistic programming. If I didn't piss off John, he wouldn't have gotten involved. But also, he's going to remember. So very often, we all get into our, cocoons. And if I'm going to make a mental change, and that is my goal, because you have to understand, at some point, it's not technical analysis that's the problem. It's not fundamental analysis that's the problem. You can learn all these things in a book fairly easy. The things I'm teaching you technically are not that complicated, right? They're probably the easiest technical analysis that you're getting from some guru. It's the least complicated because I know it works. Everything else is just too complicated, right? So what we know is the biggest challenge is us, right? The stuff inside. And so for me to change the way your brain is wired, I need to create emotional responses. It's actually required because we make our decisions emotionally, and then we justify them intellectually. So sometimes we need to open up different parts of our brain and rewire those. And for some reason it's required. There are times in your trading career where you're going to feel like it's the end of your career. And you're going to stare into the abyss. And you're going to, it's happened to me many times. It's happened to everybody I know. And for some reason it's required, right? But that's the emotional side. Right? Yeah, I get that a lot, John. So anyway, so now we've, we should all do this. John has a volatility issue. Whoa. Whoa, John, you have a volatility issue. Everyone should be trying to figure out what their issue is too, right? Right? And work on one thing at a time. So, yeah. So anyways, I'll see you guys tomorrow. Peace on earth. May the pips be with you. May your profits be above average. And, namaste. I do love you. Right? I'm not here to insult you. I love you. I want you to succeed. Cheers, guys. Cool. Right on, John 1. Everybody, big hug.